And there you have it, the closing bell at the New York Stock Exchange to end a wild first day of trading this week.
Yeah, the Dow had been in negative territory for much of the day. At one point, it was down more than 1,000 points, but then things turned around at the end of the day, and the Dow is up just slightly amid fears of inflation and uncertainty of a possible invasion in Ukraine. Investors were uncertain, however, it did recover. The S&P 500, meanwhile, and the NASDAQ also had wild swings all day. Both ended with slight gains. For more on all of it, let's go to Brent Schutte. He's the chief investment strategist at Northwestern Mutual Wealth Management. Brent, unusual day. You know the market far better than either one of us. What did you see? What's driving it? What do you expect tomorrow?
Yeah, so I think over the past few weeks, you've seen a purging of some of the more speculative parts of the market that were bid up mainly on Fed and fiscal monetary policy, a combination over the past few years. So you have had parts of the market that advanced, and those parts now are starting to have to deal with a Fed that is becoming more hawkish. And so that's the area of the market that's been hurt the most. It did bleed into other parts of the market over the past few weeks. But we do think that as you push forward, you are going to see a market that is pulled higher by an economy that continues to push up, inflation that actually falls as we shift back from spending on goods back to services as hopefully COVID abates. And then last but not least, the Federal Reserve. Certainly the Fed has become more hawkish, but their goal is not to tighten the economy into submission, but rather fine tune it just a bit so that we can keep the economic cycle going. And that's where we think there's still opportunities for investors looking forward.
All right, so you are pretty bullish there, but let's concentrate on the Fed for a second, because as you mentioned, the Federal Reserve is kicking off a meeting tomorrow that's expected to end Wednesday with a hike in interest rates, right? So what is that going to do to the market, and what is that going to do to the everyday American who may not be so closely watching the market?
Yeah, I think the market's already priced in quite a bit of worries about what the Fed may do. I think people are going to hear a Fed that is probably just a bit easier in their tone. I mean, the Fed doesn't want to actually have the economic cycle in. They're not going to over-tighten unless they absolutely are forced by the markets. And right now, that does not look to be the case. And so they will actually re-emphasize their overarching goal to take people out of the here and now about the rate hike that they're going to see eventually. They're going to focus more on extending the economic cycle, that commentary that I just mentioned, because the Fed wants more employment growth. And the way you get more employment growth is to kind of tamp down inflation now so that you can have a longer economic cycle. And that's going to be the words that I think will reassure Wall Street just a bit on Wednesday.
Hey, Brent, over in the NASDAQ, the biggest tech companies are so big that how well they do can help dictate what the market is doing overall. Microsoft, Tesla, Apple, they're going to have quarterly earnings come out this week. What effect do you think those numbers are going to have on the market?
No, certainly, I think some of the rising stock market there has come off the boil a bit, and some of those expectations have tamped down. Look, I'm not suggesting that tech is a bad place to be. I just think, and I'm concerned that investors, that's their only focus. Whenever I go on shows like these, the first question I get is about technology stocks. And that's because they've done so well for the past few years. I think as you look into 2022, you want to be in things that are just a bit cheaper. You want to be in value stocks. You want to be in small cap stocks, especially high quality small cap stocks. Those are parts of the market where their earnings are going to be growing similar to those levels that you just mentioned in those stocks, but they're much cheaper. And that's where I think you want to focus this year. And I want to make sure that investors keep that narrative because I don't want them to become too fixated on what's worked in the past.
So do you think the tech stocks are fully valued, or you see a bubble there?
I wouldn't use the word bubble, but I think more fully valued. I mean, they've had lots of demand pulled forward by what's happened over the past couple of years. If you think about the things that are enabling this call right now, many of them have been developed in the past couple of years. I think the benefits of this now accrues more broadly to other companies. And I just think that as you kind of think about the next few years, you want to be in things that are cheaper, because I think they're due for a pause, those tech stocks, because some of that has been pulled forward and people have already valued that. I just think there are other opportunities right now. And I'm not suggesting you shouldn't own those. Those are more secular growth stories. But I just think there's places in the here and now that will do better as we hopefully reopen the economy when we get past, hopefully, the next this wave of COVID right now.
So when you have a topsy-turvy market with 1,000-point swings, you can have some investors who panic, who take sudden action. What would you recommend?
Remind yourself that something that you say often, when you're not going to panic when others are. I mean, I hear that all the time. I hear people talk about that, and then when it actually happens, they think of this time as different. To me, it's not. If I show you any sentiment gauge, and right now sentiment is extremely depressed, it is a contrarian indicator. When the VIX hit levels it hits today, it's a contrarian indicator. Your time to panic was already past. And so I would suggest that people stay the course. Long-term investing is still the best path for people to actually grow and accumulate wealth. And that's what I would focus on in 2022.
I think that's good advice.
Keep calm and carry on. All right. Well, Brent Schutte, thank you so much for joining us. We appreciate your financial insight.
We do.